with the cloud. Okay. Okay, so mostly we're going to be talking about deviations. In this video today, we're going to be definitely talking about deviations, but we're also going to be talking about the box method, which some of you have probably seen already and started to use, some with great success. So I'm proud of you that you've taken this on so diligently. For those of you that are here inside the room, if you have questions, you can come out and ask. If you have things that you do or you see something that I do that you don't do, we can save some of that for the end, any major questions. But anything that I'm dealing with at the time or showing you at the time, if you have questions, please come out and ask. It's definitely okay. This is a working video. So if you do have questions or do have points of trades that you have made that we can dissect as well, we can do that at the end as well. But for the most part, if you have a question about something that I'm doing that you're unsure of, just come out and ask. All right, so the first thing we're going to talk about is the box method itself. Setting up the rules of the box method, very simple. We're using the high-low of a particular time period, over a particular time period called the 4-hour mark. So the 4-hour mark is not just something that I just made up, right? The idea of using 4 parts into a trade system of quarters works under a process that some Forex traders learned a long time ago, and that I learned a long time ago. Trading a 15-minute time period or a 5-minute time frame is broken down into sections. Why do we use a 5-minute and a 15-minute? A 15-minute for an 8-hour, which is 2 times 4, of course, and then you got the 5-minute for a 1-hour trade, breaking up into those sections. Now, that sectional deviation that you use in the very beginning of like signals and what charts we're using and that kind of stuff, this deviational process is just important because we've broken up the time into deviations. Okay, so we're not looking at the horizontal, but we're looking at the vertical line of deviation, right? On how much time it would go into the high-low period. So this 4-hour block we're using is an awesome snapshot, and you'll see why, and you'll see how it corresponds with the support and resistance indicators and systems. They're not connected, and this doesn't use the box method at all, but it's using a mentality of the box method, using a high-low mentality, as well as a time period within itself. So the support is independent, support and resistance indicator is independent of this box method, but they just so happen to work out the same. So let's look back at what signals to look at, and even just to even get into in the very beginning. Well, pretty much almost, unless the arrow is really super close to the MA, there's never really going to be a time where you're going to have an up arrow way underneath the MA that's going to qualify into our little box method, okay? So I'm going to give us, let me see if I can find a pair that doesn't have too much on it right now. We do something like this. We're not really going to get into, this one might be close. In fact, let's check that one. If we just grab a box, we're going to start at the lower corner. We're going to go back 4 hours. So it's 1600. So we're going to go back to 2. Go back to 12 o'clock right here. Right there. And there's the low. And there's the high. Now this box doesn't look very big, does it? It doesn't have a lot of pip movement. 125.03 to 84. So about 16 pips. So about 8 pips in the middle. All right. You can do the math that way as well, besides just looking at a box. I grab my line tool, I'll throw a line right down the middle. Why is it so big? You probably say I could use it directly, but I want to look a little left and a little right, or a little left when I do this, when I first do it. I also, when I do these and I'm at the signal, I also want to put that bar extending into my void area, right? This gives me a little bit of where I'm seeing the market could be going, and it gives me a process to extend past, so I can see into, not see into the future, but so I can have a spot for it to be above and below. Okay, so I have my limit areas. Now, let's see, which one were we looking at? We're looking at the buy underneath here, right? So we see that it's underneath in that lower quadrant or lower hemisphere, right? But if we also take another line and draw into that quadrant area, the lower quarter, okay? Now, let's name these parts all correctly, okay? This is the box method, right? These are hemispheres, and these are quadrants. This is the mean, lower quarter mean, and higher quarter mean. This is the high, and this is the low, okay? So don't think for a second that you couldn't use all parts of this box. We started to discuss this in Discord just a little bit. If I use the quarter mean on the high and the high itself and the low. So now, if the price, when the arrow fires, the arrow being the, hey, pay attention, there's something happening, does not so much the arrow, but the price, which is all the way up here, is in this quarter section, it's below the mean. I wouldn't take this trade. At this level, setting the strat, okay? With my experience, setting the strategy to don't take that trade. But there is a method that you could do if you're going to do this a little bit more advanced, that you could say, if the closest line is a possibility, okay? If the closest line is a possibility, then the one further out is less of a risk, right? But again, with a box this small, and I say small from the high to the low, only about 16 pips. Usually I like to kind of see it up about 20, 30 pips in a box, right? Give me some working zones, right? But we also are not looking right when we first take this trade. We're looking left. So we're kind of seeing, oh, yeah, I almost missed that there. But the box itself is broken up to these positions. Now, excuse me, in standard Forex, a deviation is an amount that you dictate, excuse me, on how far a price could go. Meaning, if I set a support or if I set a stop loss at say 15 pips, my take profit on a one-to-one is 15 pips up. I could create a deviational network that says every 15 pips, something should happen, okay? In our case of deviation, and what I'm using this term for, is that over your 4-hour block, the distance between the quarters, the high in the quarter or the low in the quarter, and the distance between the high and the mean can be set at deviations. Here's what I mean. If I want to look like there's a price that's down in the lower quadrant, right? And there is a sell or a buy in this position here. And it's down in this lower quadrant here. If I go with the low, that's high risk. But if I take another box and I say, what's another level I can be at? Watch what happens. I'm going to make a box just right here like this. And I'm going to drag it down here. Now, I want you to see something. These lines, these green lines, that's the MA, right? If I were to, or that's the support and resistance. If I take that away, this box has nothing to do with that MA, but look at that. That almost lines up perfectly. You see? So there is a reason here for you to kind of pay attention. If it's not this line, then it could be this line, right? Because I've set out one deviation away from my box. I could still take this signal. This is the all-in process, right? I could still take this signal and say it could be a buy, but I wouldn't take it here. I would say, put it at this line. Now, how many deviations would you go down? I would really only ever go down one outside the box if it was something to this effect. I wouldn't take this one. I could take this one. If the price was here, I wouldn't take this one. I would take this one. And this kind begins to set things in motion for you on how far would you go down into that level. And again, I would only go one down or one up from that point. Now, in this particular case, you wouldn't have known that this would have traveled down if I would have taken this particular trade now at this level. I think I would have lost. Let me see. 124.84. This is the Euro JPY. What time was that? 1600. Did anybody here take this particular trade at 1600? Nobody would have. No, wait, would they have? Either way. Can you guys hear me okay? Is everybody here okay?
Yep.
Okay, good.
Yeah.
So the idea of this kind of mentality of following deviations, if you start seeing it, it becomes really, really clear, right? Because watch what happens again if I duplicate this box here at the same time period. And I drop it down to here, it almost perfectly fits down to that red zone area. And this becomes the mean in between the two areas. But then as the market goes on, about every hour, this is going to shift a little, right? Because we're on a 5-minute chart. Every hour is going to shift a little. So you could potentially, at the level of each arrow that pops out, you can redraw this whole entire process again. It only takes a second or two, and you can start looking at the deviations. Becomes a lot to contend. Ooh, that's one way to get rid of all the support lines. Let me grab, I'll just use this box for now. There's that. Let's not come into the middle. Don't even really need to put the, and again, do you really need to put the lines in? That's up to you. This one kind of works out really, really well. Again, there's a reason why, right? Is it 16 pips again? 125.02 to 125.80. So 22 pips, so about 11 pips this time, right? So it's a little bit bigger, so the deviation would come down a little bit further if you were to use it. But again, if I were to do that, it's about right, about half there. Look what begins to happen. Almost perfect to that red line again for this particular time. So this red line gets drawn on here, and it almost adheres to it perfectly. We didn't know that information before, right? I drew this box off of this box's information from 4 hours prior to. But yet when I take it down here, look how easily this predicts that movement. This is no joke, folks. This is how the big guys trade. So you can use this information. On this particular one, you wouldn't have to use it as a lower one because here's where your trade is. Again, getting rid of all my lines. See? So the price right here, now you probably wouldn't have gotten filled on this particular trade unless you were to come down into and trade directly at the quarter mean here. Okay. But again, this is something that you got to sort of make okay with yourself. I mean, I've seen David Many in here. So how many working orders do you put on that get filled or don't get filled? And there's tremendous that I put on. Sometimes I'll put on 3 or 4, depending on which ones that I want to get filled. But as of now, I'm hunting out my perfect trade and what that looks like. I don't want to try to force fit a trade to happen for me, which I could do a million times.
Hey, Matt.
Yeah.
Most of my working orders don't fill.
Right.
So,
but the ones that do win from what
absolutely.
I see chart.
A good percentage of the time.
Remember, you're not trying to make a trade happen for you. You're not trying to make the price work. You're not trying to make the arrow work for your price that you choose. You're hoping, just like with the old daily signal system, right? This was never about I don't know how many times I could tell you that I listen to people go, Max, I get to the signal, I see the signal and I go, and the price is so far away from it. Yeah, absolutely. Because you're waiting on that 30% chance that it's going to pop up and grab your number. And if it does, it's 90% successful. But it was that caught in between, that 90, that it only filled 30% or 20% of the time. This is the same mentality that if you choose your levels correctly, right? Listen, this is how easy it is. Don't follow a system that's gonna say, I can make this signal work either this way, this way, this way, this way, or this way. Follow it to where if this signal qualifies, use it. If it doesn't, don't use it. Here's a strategy for you. Don't worry on how to make this signal work, this arrow work, because it doesn't follow the program. Well, Max, why would you even have it in there? Because I want you to see how the market's moving. When the market feels that rejection, when the market, you know that there's going to be arrows in there because it's doing something. Could we just not have it in that way? Yeah, possibly. One day we could have it to where the dexatomic system itself, the dexatomic system, would only put on ones that qualify into this process. And that's something that we could do because this is something just recent that I've been applying, not just recent. I've been using the box method, but not in this fashion. I was never drawing the box out. I just visualized the box because I've done it so many times. So in this particular case, you're learning how to read the market and choose your trade. So it becomes simple. All these other lines disappear. You draw a box, you look at where the price is in the mean, right about there, and it starts to make sense. It starts to make sense because you get stuff like if you go to the mean, where's the price being rejected at? Look, right there. I go back to the mean again. Here's another lower end of that rejection right there. God, that was a terrible line. I should be shot. I got a line tool and I'm trying to hand draw. It's crazy. Right there. Look at that. That's the mean. One little head and shoulders there. These things meet up for a reason. Look at that. All the way to it. Rejection, rejection, rejection. Holds it. Breaks it. Holds it. Breaks it. And now it's treating it as the level. Now, for how long from that point? Well, if it did get filled, this would have won. Okay. But this may be a one that, well, maybe not this particular one because it's 5 o'clock and there's nothing on between 5 and 6. We do have a system that prevents from arrows jumping out, and I'm reluctant to add that in just yet. There's a new update that we're going to be doing with the program here soon. I'm going to be adding some special features into this thing on when to show arrows and when not to show arrows. We're going to start anticipating the movement into the ZDON system as well, being able to automatically trade too. So very exciting. At this point, does anybody have any questions? I would suggest that you follow the box method and use it as your strategy. Use it as your Bible, if you will. It's simple. High, low, 4 hours. Signal, price should be above. Okay. So in this particular case, this one was a clarification. It would have been, would have been validated. That's right there, right? Because there's price. But what price do you don't use the mean at that point. You use the quarter mean from that point.
Max, a question.
Sure.
So in this example that you're using, the arrow comes out. If you look at before, the first pullback there would be
here.
No, the first pullback would be, because it's going down, it's going to be
to
back
the left.
Two more candles. Nope,
so,
to the left.
Right. So 2 more candles. So right here.
But it's a buy, so you got to come down, right?
Right. Well, yeah, the first main pullback is here.
Right there, right? So
Yeah.
that's what I'm talking about.
Yeah.
So that's where my pullback would be. Now, in this case, it's not quite in that bottom corner, but if you look at the next pullback over, you're right there.
Right.
So you take a strike between there and that end of that box, that should be a pretty good price point. Well, guess what? If that price point didn't go all the way to the end of the box, look, it would have won. It would have filled and won. No question about it.
Yeah. You're absolutely right. Again, the prices that you see on the 4X chart here, these are not Nadex prices, right? So you don't know
I'm
what
with
this,
you. Yeah.
So,
I've
but
been
I've had a couple so far, which was like, Max, it lost on paper, but it won on Nadex. Well, yeah, there's sometimes when I look at what's on Nadex, like for something to this extent, okay, I try to see what price, where my prices are. If the price comes into here too much, I don't buy it. I'll go to one that's further in.
Right. I would be more conservative on that strike price because
Correct.
your deviation, if you will, or your quadrant takes precedence over price.
Correct. That's a great way to look at it. Quadrant position takes precedence over price. A lot of P's in there.
Sure, you can quote me on that.
I will. I'm going to quote you. In about 6 months, I'll forget that it was you, and I'll quote me. And I'm like it.
I don't care at all.
But you hear what he's saying, is that the pullback that we were originally teaching, not this one, but this one, but this is the true one. I mean, if we take that line away, it kind of lines up there, right? So if the price is here, this is a high risk trade, very high risk, you would have lost. And this is the low, this is right here. If we put that right there, this is a winner. If we would have gotten filled up here. Because remember, Nadex is 2 pips higher. So this is 124.84, 124.86. It would have been on Nadex. You would have taken it at this 124.84 and below. You wouldn't have taken it higher into it. Remember, like he said, the price on the quadrant takes precedence over the actual price, the position of quadrant, okay, where it's supposed to be at. All right. And if you need to adjust that quadrant, listen, if this is like, you know, you want to be to the closes, and let's say the quarter mean is like right there, right? And you see something like to this effect. This is like a little railroad track, right? When I see like the wicks extend past, I don't worry about that. But when I see this, I want to bring that down to it, right? And you want to come into the trade. If you're looking this on the buy, into the trade. If you're looking up here, the quadrant would have been pushed out that way, right? If the quadrant was down here, you would have brought it up here or even to here. And start looking at the support and resistance lines and the DV or the means in between the lines is a possibility as well. This begins to sort of fill in. Let's see if we can find another couple that we can look at. Like this one right here. Again, box. Here. So again, this is just a positioning of the 1800. So 2 o'clock. Gonna run math in my head after today. Right there. That's pretty big.
So each one of those blocks is an hour. So it's real easy just to go 1, 2, 3, 4 blocks over.
Yeah. Yeah, right here, down here. So the process again, just simple, boom. But again, we got the green line in there at the mean. Kind of meets up pretty strong, right? Isn't this weird on how that 4-hour block works from that hour? And then look again, quarter quadrants right there. Once you start to see this, it becomes almost pretty scary. Let's see, what's this price here? 72.07, 72.08. This would have filled right here. So this actual trade, this live trade is happening right here, would have filled right here. depending on if you were able to get at the actual line. If it was a couple pips in, you might be a bit SOL. But this, to me, would be a winning trade. Let me look back here for a second. You see, again, let me pop this up like that. The box itself, the arrow being below, disqualify. Now you could create the deviations out, put quarter, bring it down, and move it down one to see if that would work, or you could use the external, the high, low, all that stuff. But highs are meant to be broken and lows are meant to be broken. This one here would have been purchased, I think. Just kind of stays right there. Quarter mean. But see, this would have been too close. At the quarter mean level, I would have been up here. Oh, wait. Yeah, no, I would have been up here because this would have been too heavy. Yeah, because there's price right there. So this one probably wouldn't have gotten bought into. But again, how many a day do you need to trade to make good money? David Menning. 2, 3. So you get to your computer, you go down your 5, go down your 10. I don't care anymore. Find a pair. If you find a pair during the day that works for you, stick with it. If you can get one out of it that's perfect, don't try to make these ones work. If it's too far down into it, if it's a buy signal and underneath and all that stuff, hunt out perfection. Be cautious. Find your 1 and win it. Find your 2 and win them every day. And you're winning $189. Every trade. We got 3 contracts on. 400. Yeah, buddy.
I go for 2 a day.
2 a day.
That's 3 contracts, so that's good money.
Yeah. Take 2 of these and call me in the morning, said the doc. So that doesn't take much. Some of you, you know, I've talked to some of the people that are in this room right now. And this process, and for some of you that are watching this after the fact, this process is no joke. What's the toughest part of doing this? It comes down to your patience and discipline. Once you see it, you can't unsee it. Once you start to follow the flow, rarely anything will get in the way of that. But the majority of people who fail at it, they let themselves get in the way of it. You see, David Menning takes 2 trades a day, probably puts on 4 or 5 contracts or puts out 4 or 5 trades of working orders on. They don't get filled throughout the day, but he's waiting for perfection, so they have to be perfect. You think he's going for these under the value means? No, he's not going for those. He's not going for anything that breaks that rule. He's looking for what strong levels he has to work with. Reds, and he uses maybe a little bit different system than the box method. But let me tell you, if he's just waiting for 1 or 2 perfect ones to happen, and that's all he needs, 3 contracts, I forget what that was there. It's not, look at that. It's $129 for each one. So what is that for? $258 a day. Last time I checked, he was trading live. So anybody have any questions?
I got lost along the way.
Uh-oh.
So what kind of behavior are we expecting if we do get some strong correlations with the existing lines using a box?
Evan, I'm a little bit confused on your question.
Like, I'll have to watch the video over again.
Okay.
I'm just not getting the point, I don't think.
Okay, so the arrow depicts the direction. The direction of the picks the direction that you're going with. You're going for a sell on Nadex, right? So on Nadex has the statement prices that you follow. So we're putting a statement price onto Nadex at those deviational lines, right? At the means, basically, right in the quarter means. Does that make sense?
Yeah.
So the box itself moves every hour. So you're not just doing 1 4-hour box at this level. It's going to move, high, low, depending on the market. So the next hour, it'll drop down just a little bit, right? So I guess, so again, I'm a little confused on your question itself.
My question is, so I like get how we draw the box, and I get how we like get the means, but what kind of behavior are we expecting forward of the box?
Okay. I see what you're saying. So the behavior is depicted by a couple values. One, if you're on a sell and you have a good, strong, this is the 50 MA, the moving average, we're depicting that the box will be moving, the price will be going down. So we're going to be wanting to buy, get a statement at Nadex at the above level, wherever the arrow is, right? Not the closest one, but the one above that. If the box is in the opposite direction, like with this one right here, you would expect it to probably have a little bit of a pullback. We call this negation trading, right? Where it's coming in and then it'll negate past the trend, since the trend is higher or lower highs and lower lows. So we're depicting that the market, once we draw the box, depending on where it's at in the quadrant or what hemisphere it's on, we're depicting that if it's below the hemisphere for that time, that means that it's going to be going down. If it's above, we're depicting that it's going to be going up. Make sense?
And the hemisphere is the center line in the box?
The hemisphere being the high, low, the mean, which is the center line of the box. So this would be the hemisphere up here for a buy, and this would be down for below for a sell. But we only do it when there's an arrow present. We don't do it every arrow because it just unfolds at that point. But the process is simple. The arrow depicts that there's an event happening, and that's when we take a look, and that's where we use that judgment from.
Yeah, that makes sense.
Okay. Anybody else? Well, great. The next step for all of you, if you're here, there's the top of the hour. Let me just do a quick scan because we're at 7:04. None. Buy zero, none. No. Euro JPY, none. USD JPY, none. It makes it simple. When I get here and I look and I see the arrows below, I'm not going to take it. I mean, I could draw the box on this, right? If you're taking the all-in process, this is something that we've had people ask about. Is there I'll just put it right there. Is there an opportunity to take every single one? And the answer is yeah, you could take every single one, but you're going to have to be acceptable with more losses. You're going to have to trade more. You're going to have to be involved more. You're going to have to pay attention more. It took David Manning and a handful of other people to get to a really strong level of success. And now that they don't have to pay attention as much. They just have to follow their rules and make them more stringent. And once they do, then it becomes truly about CVG, the consistency plus volume. All right, so in this particular one here, see, this is one that's technically, yes, the price is above in that hemisphere, but it's still below the moving average. So you could technically put a trade in for right there. And again, if we move that line around to fit some part of either coincidence or level, right? There's a quadrant. You could come up to there because that's a pretty strong level to be in that quadrant. But I would probably stay right around in that quadrant area. If it's more into the trade, I probably wouldn't take it. I'd be more comfortable being out here. This way, if it collapses and gets picked up and then moves on, then at least you're safe. But if you never get picked up, you haven't lost anything either. Make sense? So this would actually be a trade that could be taken, but I want to see the price above. I want it to be a part of a moving product, right? I want it to be in the trend of moving and doing its thing. But sometimes you might need to wait for a pretty long time, and you've got to wait to hear. This is a couple of hours. All right. All right, I won't take too much more of your time. I just wanted to give you a quick look at this, that there are many ways to trade the process. You can choose which way you're going to do it, but you have to be acceptable for the results. The more you try to force the trade to fit into your process, the more you're going to have to trade. To where if you find your set of rules and you stick with them, the less you'll have to trade, the more volume you can use because you'll be able to trust your trades because you have a set of rules. You'll see the outcomes, you'll apply the volume, and you'll definitely get to your goal. All right, you guys have a great day. I'll post this video into YouTube and it'll post into the Discord unit. And then you can share it with anybody in there if you need.
Thanks a lot, Max.
No worries. You guys take care.